Hi, welcome back. Not looking good for the equity markets, but there is some relief from the commodity space. Manisha Gupta joins in to tell us about the fall that we've seen in crude this morning. Hi, Manisha.
Well, yes, sharp, deep cuts is what you are seeing in many of the commodities as well, including the crude oil prices, which of course are helping the equity markets there, could be helping really. But we have seen nearly 4% of a cut in last 12 hours come in for the crude oil prices. After 2% decline in the overnight markets, we have seen yet another 2% of a cut in the Asian markets, and that's what's mirroring into the Indian space as well. Well, you have seen the Hurricane Michael not make a landfall near Gulf of Mexico oil facility. So that premium seems to be going off the markets. It also is about the global equity market sell-off. The IMF report, which has downgraded the global demand consumption growth for 2018 and 2019, that's taken a lot of steam off the crude oil prices. And then, of course, you also have seen the US weekly inventories show a gain of 9.7 million barrels. And that, of course, has been weighing onto these markets. The only thing that would continue to support, of course, is the Iran sanction deadline on 4th of November. That is an issue that the markets will keep an eye on. And once this subsides, you will, of course, see some buying on those lower levels come back into the markets. So it really is about $80 a barrel of a support that now the banks and brokerages are talking about. Well, the kind of uncertainty and risk-off that you are looking at in the global markets seems to have supported the gold prices. That only is the green spot across a global commodity space that we have seen. So some buying is what has been seen there, 0.25% up in the international markets, and you have seen some further buying come in for the Indian space. The rupee calculations also have been cushioning the kind of fall that we have seen come in for the gold prices. But silver trading very flat, and it's a deep cut yet again, excuse me, in the metal space again. Of course, China has been trying to make up with the policy reforms, but what's happening in the global markets seems to be really bothering the space. So almost everything is trading in the negative, and how nearly a couple of percentage points of a cut is what we have seen come in for Shanghai. Even the metals, which have stronger individual fundamentals like supply deficits into the global market, strong demand, etc., mine issues, have not been able to hold on today. So it really is not about the individual fundamentals. It is about the macro picture, the risk aversion that has led to a sell-off in Shanghai and on LME for many of these metals. Trading strategies, and we have them from Kedia Commodities. It is a buy call in case of gold prices. 31,550 is what they're watching out for. A sell call, though, for the other commodities. In copper, they're looking at a downside of 453 in the day today.